5%. Now they're back to flat, like 0.05. We are continuing to rock and roll with the daily profit play. We have seen the last 3 or 4 days closing inside of our 50% ATRs. So that continues to be a really simple trade. Let me go into my trackers here. I'll bring the notes up. We also had a really good couple of master classes this week. Masterclass on Monday, Tuesday, daily profit play. New trade on waterfall income. 2 master classes and live trade sessions on pinch point. All in all on pinch point, let me check the tracker here. I think we end up putting together 7 live trades this week with pinch point scanner. Let me find, I think we started at UPS. Yep. So UPS, new trade, MCHP, SYY, CMA, Voya, and then we have a couple pending orders, another trade that's live OKE and OKTA, and then some more pending orders where I'm looking to buy some dips at support, try to get an asymmetric trade where we are, risking one to make one, and we can set a 30, 40, 50% take profit. So good masterclass and trading sessions this week on pinch point. The scanner's been discounted to $14.95, so you can check that out. I'm doing a masterclass today in Project Options Edge. If anybody's interested in learning kind of a nice little arsenal of strategies, I'm going to reveal, probably 5 strategies today that I trade. We trade as many as I can think of. So one thing I'm looking at into 2026, or I've got a couple new clients that are coming on board for my fund. And so getting them established with current levels, I mean, everything is frothy. Everything is high. Gold's at all-time highs. Silver's making, close to all-time highs. S&P, NASDAQ at all-time highs. Dow Russell at all-time highs. It's tough to look out there and say like, yeah, this looks good. I should just buy everything right now. So what I have to do is consider, okay, let me go out to like 2027, 2028. Let's get some duration on these trades. But what's kind of nice is I can create a synthetic play. I'll talk about this more in Project Options Edge, where my thoughts right now is if I had to establish a position that was S&P long or NASDAQ long, obviously I'd rather be long than short. I think that makes sense. The market still has maybe some juice to the upside as we melt up into maybe round numbers like 7,000 S&P, 700 SPY, to kind of reach that 20% milestone for the year. Whether we hold it or not remains to be seen. But I think this market, even with some sideways, even with some dips and pullbacks, I think the market still, has some pretty heavy animal spirits going into 2025 at the end of the year. 2026, if we don't have much of a pullback for the rest of this year, then I'm a little bit more, I'm not going to say bearish. I'm just going to say I'm a little bit more pullback. I'm expecting pullbacks in 2026. So if we go to SPX here, okay. So if we go SPX, let's do the 12-month candle, and let's see, what the measurement is. It's really not that far away. It's right around 7,000 if we measure the start of the year. So if I go start of the year all the way up to 20%, we're going to look at the 7080. That's 19.97%. Okay, so 1776 or 1780. We'll go settings here, 7080, and that would be SPX 2025, 20% year to date. So do we hit the 20%? So now you go to the daily chart, and that gives us at least a milestone to be like, well, don't fight this thing. Any dips, we can look to buy. Any sideways movements, we look to buy. Pullbacks to the 50 period, which are now well over 100 plus bars. Historically, the longest bar count is 128 over 30 years. So, I mean, if we somehow hit that, it's like, congratulations, we just made another, crazy long all-time record. But I do think history has a way of snapping back. So this is now like 106 bars. 102, 105, 112, and 128 are the other top levels that I've looked at for the last 30 years. We are up above the FOMC breakout candle a little bit. Futures market, again, 0.05, 0.06 this morning. We'll get some levels. The VIX is still elevated. We're at 16.47 on the VIX. So that does make our potential highs and lows like quite wide. But, I say that like we've got a 16.448 VIX, and yet the markets have gone next to nowhere. If you go to opening bell, start to finish, I mean, I have a dead zone today that's for 590. So I'm going to put here, this is a dead zone, 5.90 credit. I'd like to see price getting either above or falling back below. So we're opening up a little bit higher. Can we close again at all-time highs? We're going to give some back. Let's see if we take out this low here at 66.93. And message will be Thursday's low. And to see if we break the all-time highs again. So I have a pretty interesting setup. I did roll a broken wing butterfly out to the end of the month. I'm kind of keeping the 6,700 by 6,720 trade alive in the bear call spread, but I also have the 6,690 by 6,700 bull call spread, part of that butterfly. And if we stay above 6,700 today, that's $1,000 winner. So it could be good. I also could give back that trade. That is a very cheap, inexpensive debit spread. So the net result is, because I rolled it out for a debit, and I don't like to do it, but I'm essentially just extending the life cycle of trade. So today I'm kind of cheering the market on, like, hey, no non-farm payroll, no news is good news. Let's see if we just, maintain these levels. Also, as far as positive, negative gamma go, we're opening up a little bit higher. We can see the 6750 is a pretty big level today. Are we going to see it? We're still well supported above 66.95. Okay. So positive gamma still sits here around 66.95. Can we come down and find it, bounce off of it, or do we go up to highs, maybe hit 67.50, and then we'll worry about a pullback later, maybe coming into next week? Okay. All right. Let me see some comments here. Non-farm payroll now taking place a week today. Is it? Is it on the calendar? I mean, I wouldn't be surprised if we have some type of, bipartisan olive branch extended this weekend. Maybe they get their crap together and figure out that we can't have government shutdowns. It's going to weigh on everything. The good thing is we don't have inflation data next week. I feel like if we had CPI and PPI next week and we still had a shutdown, I think that would make the market a little bit more sensitive to, like, what are we doing? We're just now in like this big blackout zone of like, what do we have inflation that's higher? Is it lower, higher? Is it better, worse? What about jobs numbers? Because all we had this week was ADP and they were terrible. So I'm wondering if we actually see something on the calendar. Says government shutdown or data may be impacted by the shutdown. Tentative results are subject to delay, revision, and cancellation. So that's just on our calendars here. If I go out to next week, New Zealand cash rate decision, FOMC minutes on Wednesday at 2, unemployment claims for the U.S. Again, these are tentative, so maybe we don't have this information. This is all on Thursday. And then Friday, the 10th. So it looks like we are seeing another wait and see, but non-farm will be posting on Friday the 10th. So that's hoping that the market can, I guess the government can get their stuff in line and let bygones be bygones and just get the government back to work. But it's probably going to be a shakeout. I just talked to a friend of mine yesterday. His niece graduated from the University of Michigan and was going to work for the Department of Energy. And she's furloughed along with a bunch of others. But yeah, it's disruptive. This government shutdown stuff is disruptive. But it is what it is. So did it scare the market? Not at all. Not even close. Right? What else do we have? Go from 468, 461, then 490. Let me check. I don't have the 490s. What are you talking about? I've got a 468. Okay. Sorry. What happened there? 67, 68, 69, 70, 1, 2, 3, 4, 5, 6, 7, 8, 9, 80, 1, 2, 3, 4, 5, 6, 7, 8, 9, 490. So this is 491. That's my bad. 491, 492. I labeled one wrong and it put me off. So 494, 495, 496, 497, 498. There we go. Fortunately, it wasn't that bad. But like 5 or 6 trades because I accidentally put in a 6. But yeah, we're up to 498 trade wise. Thank you for catching that. Okay. Thanks, Andy. Appreciate that. Cindy, good morning from Maine. How I wish I was on the East Coast right now. These starts at 5:30, 6 o'clock a.m. are getting a little. They get old every week. I don't envy anybody that's in California or Hawaii. Yeah, I miss the East Coast. I missed when you can naturally wake up at 6:30, 7 o'clock, and it's like, oh, Market still is, opens in 2.5 hours. So, but yeah, that's got to be nice. Yeah, being from Michigan, everyone coming in for those fall tours, and I'd love to have a nice little apple cider donut at this time. You don't get that a lot out here. So we've got some mountains, we got some colors, but it's still it's cooled down a little bit. It's like low 70s out here in Utah. I'm just north of Salt Lake City. Waterfall trade today? Probably not today, Rob. There's not. I mean, the live sessions we do on Waterfall is always on Mondays, and I said I had a message from a member yesterday in Waterfall Income. Sean emailed me. So for those of you that were with me yesterday, you saw that I had like a little snafu in my broker account. It was showing $7,500 in buying power. So looking at this account right here, $7,500 in buying power, and it went negative to -6. Well, in the session, I ended up closing out my shares of Alibaba. I wanted to get out at, or I'm sorry, it was Baidu. I wanted to get out at 155 and close it for 143 yesterday. So I still took a nice profit. I've been in that trade for a couple of years. It was 122% gain. But I got the buying power back there, and then I closed out 2 of my waterfall income trades. I didn't make that an official close for the group. So I have those waterfall trades still running in all of these other accounts. And so those trades are still active. They were the November expirations. There's a 99.5% chance of profit. So I didn't officially close them. I did it because it was going to free up about $1,500 of buying power. So it was 2 trades closed out. That's $3K. I got $7,000 or $8,000 back from closing out Baidu. And all of a sudden, I called Tasty Trade like I said I would, talk to the trade desk, and they did a re-ping on the clearinghouse server. I don't know why I'm circling EEM. They re-ping the clearinghouse server, and all of a sudden I showed 20K in buying power. So I realistically didn't need to close anything, and I truly still had like that, $8,000 in buying power. But it is what it is. I took profit. It's fine. I'm still quite positive on the year, which no complaints. But now I've got plenty of cash to work with. So more trades on pinch point, more trades on waterfall, more trades on daily profit play. And the good thing is it's nice to have the cash ready, and I'm not trading on margin. So I even though I have portfolio margin and I've got IRA accounts, standard margin accounts, I never want my option buying power to go negative. I never want to trade on margin ever. Even if it's like, oh, I need to leverage my account. I'm all in. I want to use the option buying power that's available and keep it that way. So I don't know if anybody out there trades on margin. If you have a margin account, that's fine, but I don't treat these like I have margin to trade on. Reason why is if your option buying power goes to 0, you can still have stock buying power because of margin. But right now, I'm not sure what that going rate is. I know Robinhood is, trade on margin at like 5 to 6%, which they claim is like the lowest in the industry. I think Tasty is probably around 7 or 8%. Sometimes Schwab, from what I've heard, is like 8 to 10%. Interactive brokers, I'm sure, is worse. They're probably double digits, but nevertheless, that's a pretty high interest rate to pay, or that's a pretty high, margin rate to pay. I don't think it's worth it. I mean, look. In fact, I found this. So this account, I've generated $108,000 on, and probably at any given point have only used, I would say I've only used about $100,000 to $150,000 in buying power this year. So I'm doing pretty well without allocating 100% anything. In fact, I'm still sitting about 47, 48% cash right now. I generally only need maybe 30 to 50% of the account balance in order to generate solid returns. And that also gives me the dry powder that if we get good outlier type opportunities, I can scoop up, good participation levels at massive discounts, and gives me some workability to own shares and also repair them, so I don't have to take a lot of losses. So all these exciting things I can talk about today in Project Options Edge, because that's a little bit more of the, full discretion and full strategy suite that I deploy in that service. So yeah, except when broker glitches, I know that was weird. It was weird. Again, it could have been worse. It could have been like, oh crap, I'm closing out positions I didn't want to close, or I'm closing out positions for losses. But the nice thing is I close out winners, winners, winners. So, it could have been worse. And that's kind of my life's motto, is it could always be worse. All right. We can use margin during a market. Well, you can, but again, it's like there's plenty of leverage in these markets, even for my IRA accounts. I'll show you an example. Let's say, does anybody have a level? If we had a pullback, does anybody have a level they'd be excited to buy at? I think the reality is, I don't know if we get there, but watching how large this pullback could be, we have this is the 2025 pullback zone. Even if we go into crazy high levels here, a pullback into this area. Okay. A pullback into this area gets me a little excited to start dipping my toe in the water as far as like maybe I'd be more positioned for that low. Maybe I look at maybe something synthetic where if it goes down, I can still ride the downside. So let's say that the market does that, right? Let's say that I want to buy the SPX or the SPY at this level. Okay. Or the XSP for that matter. I can do all this stuff synthetically, but SPY, I would consider doing SPY Qs because I have enough cash to own some of the shares and also gives me a lot of flexibility to repair. So even if I'm in the hole, I can own shares, sell covered calls, and flip. I talk about this in my waterfall income with my advanced trade management section of that class. I took a loss on this trade in December of 2024. That loss was $330. It's now worth over $5,000. I repaired the trade. I did have to take the shares of the SPY, but I've turned a $330 loser into over $4K a profit. I think now it's over $5,000 based on the last roll that I did, and I'm going to keep rolling it. So hopefully, we mentioned rolls yesterday. If I roll additional calls out, give myself more time and duration, I can probably roll that for another $300 to $500, another $300 to $500, and ultimately, maybe end up turning that repair into like a 6K win. So if I did that, I would probably look at, let's say, the SPY. Okay, which is trading at 669. Futures is coming in flat this morning. We have 9 minutes. I want to get some levels out before we go. But let's say I did it right now. Okay, I did it right now. SPY, and I'm going to look at the options chain. And if I go out to January of 2028, which I know is a long ways out, but if I were to sell a 665 put and buy a 665 call, that is a synthetic long. This cost me $4,300. Okay. So I can buy what represents 100 shares of the S&P. Now I can make this also a little bit cheaper, actually be more expensive if I buy protection. But if I went 665 and buy a put, I give myself a little bit of breathing room here, but what's the cost? This is $9,000. So for $9,500, I can ride this out where I'm still looking at a potential assignment. I can use this 655. It would cost me $9,500. So I can trade this in any of my accounts here. So $9,500 to own what would be representing long the SPY. And I also have a long put at 655. So if we do dump all the way back down to the highs at 613, I could ride this put down to maybe $30, $40, $50 of extra profit. So if I turn this, $51 debit into a, I don't know, $100 credit, maybe $125, $150 credit, then I lower my cost basis. So this would be something I could do synthetically where it only costs me $9,500 versus I buy this in a cash account, and to buy 100 shares, it's going to cost me $67,000. That's a big difference. Okay, but that would be a nice way to establish a core position, have some downside protection, and then also have the cash ready where I would want to own shares. So that's out far enough where there's a lot that can happen between now and 2028. That gives us all through next year with the midterms. I don't have to keep the position running. It's like I can still get upside appreciation. I can have downside protection. And I don't know, it's a good way to kind of consider protecting the portfolio, playing the game, allowing this thing to melt up. You're essentially trading like a full 100 shares. That's kind of what it feels like in synthetic. So anyway, we'll talk about this more in Project Options Edge this afternoon. All right, let's get some levels today. So we have a pretty large gamble level at 67.50. Let's go dynamic trend. Check on my 0 DTE. Yesterday, I updated the daily profit play. Here is a look at the last couple of days. I'll mark our levels. So daily profit play in my ATR tracker. Between the 50% ATRs, yes or no? Yes. This one was literally right at it, like 1 or 2 points above the 50% up ATR. And then yes, meaning these finished all inside the 50% ATRs. So I talked about this week in the master classes. If we have these daily profit play indicator levels, you could just think of this as a grid trade. Okay. And it's not foolproof. But if I was to, bear call spread, bear call spread, bear call spread, the probability of this thing going up here is slim to none, right? Bull put spread, bull put spread, bull put spread. The thing going down here is slim to none as far as getting through them. Now, obviously price can go to the 50% and possibly go higher. So we might take a loss here, right? But if I take a loss here, but I can get a win, I can mitigate that loss possibly, as the day unfolds, I can scale in where it allows me to kind of, find the trade that I need to find. But I think a starting point almost every day is just a simple 50%, 50%. If price stays in the middle, you got a winner a lot of times. So what I'm looking to track here in real time is how often are we seeing this 50% up and down and price finds a way to stay in between. I'm not going to put a percentage to it, but I would imagine it's over 50%. I wouldn't be surprised if the market stays in between these 50% ATRs more than 50% of the time. I know that's not how we want to trade. I'm not trading coin flips here. I work my butt off to try to get a high win percentage where we're winning, 89, 90% of our trades. But that's a lot more discretion. When it comes to higher probabilities, okay, well, if I didn't want to take the proximity of the 50 and 50, maybe I can take the 100 and 100. This might offer less credit, but I don't just accept the credit as is. What I do is I set the credit for something I think is reasonable. So if this is a 5-wide spread, then I'll put it in for $1 and the broker can move, the price can go down. I get filled for my dollar. And if it bounces off there, that's a pretty solid trade that shouldn't really go further than this 100% ATR to the downside or to the upside. Okay. Nothing is foolproof. I wish I had a never lose strategy because I'd obviously trade it. But what I do have is good probabilities and house edge every single day. We align ourselves to market makers. That's what Daily Profit Play is all about. Today's levels with the VIX at 16.4, we should not see prices going higher than like just over 1%. That would be a pretty big Friday. I think the markets have been pretty choppy this week, considering, the shutdown is here. It happened officially October 1st, but the market is up to highs again. All I see as far as option flows is potentially up to this 67.50. So if this positive gamma just remains for today, a lot of highs are created on Thursdays and Fridays. And so if that is the case, then we might be drifting up towards 67.50 today. So positive gamma remains above 66.95. So here is the deal. If price holds above 66.95, this market, it stays supported. We have a high yesterday around 67.30. We have a gamma level at 67.50. If it climbs to reach it today, there it is, right? We'd stay positive gamma, go up to find this larger level. And if we hit it, that gives me a bonus on that broken wing butterfly. That 66.90, 6,700 is a $10 winner. Now, that $10 winner does still have a pairing with a 6,700 bear call spread, but that's now out to the end of the month. So we'd have to sustain this move all the way to the end of the month, and maybe we do, maybe we don't. All right, so let me get my levels here. What's the numbers on 16? 16.44, just over 1%. So 1.03. So 1.03 is up to around the 67.85. Okay, 67.85. And the 1.03 is around 66.50. 66.50 to 66.45. Potential bottom. Speaking, am I using my Shure mic? Yeah, I am. Okay. So I want to make sure I've got this microphone working. There. So potential top, potential bottom. Looks like the positive gamma 66.95. I have this all on my dynamic trend software, which I'll bring up here. We got 1 minute. Reverse on counter still. Yes, Randy, I'm still in it. I want to see if it gets out of the dead zone today. So if we can get outside of this Friday dead zone, either above 34 or down below 10, honestly, at this case, I would say let's just mark the highs. Let's get up through the highs. Maybe we can hit 67.50, grab a couple bucks out of that trade, and see what we get for the day as well. Okay. So looking at these levels here, we have pre-market. So that's, my largest gamma level is 67.50 for the day. That could be where the flows and the drift and this kind of complacent zombie market to the upside, positive gamma. As long as we stay above this yellow shaded zone, that's my positive gamma. So above this, positive gamma, below this, negative gamma. Okay. And we're opening with a little bit of a gap higher. All right. So no non-farm today. Previous highs at 67.32. There is a 50% ATR at 67.38. I want to see if I can get sells up here. So the 100% ATR. So above my 6750, I would consider looking at some sell trades. So can I get a 50, 55, or even the 6760? I think that's kind of the safe trade. Is if I'm going to do a bear call spread, it's got to be out of the way. And there again, this is real time gamma. 50% ATR is 6738. The 6760 is the 100% ATR. So that's where I'd be looking at it. Let me see if I can set a chart alarm either above the dead zone high. And I'll put this one up here towards the dead zone low. So I want to see if we get out from underneath it. So SPX, looking out for today. This is my, let's see here. 67, 10, and 15. This is my inverse iron condor, reverse iron condor. So I need price to either be below 10 or above 35. Okay. Now when it comes to my sell highs, I'd like to sell all the way up towards the 60 to 65. So if the 60, 65, if that gets filled for $1, and the 70 and 75, see if that gets filled for $1, and 80 and 85, see if that gets filled for $1. So I'm going to put in some bear call spreads right now. As long as we stay above 66.95 today, let me see what we can sell to the downside. So can I go 95? These aren't terrible. I can do 66.90. It's a 14 delta. Gosh, only 40 cents for that's awful. Let me see. It's kind of brutal. What's the plus minus on the day? 20? Plus or minus 20. Okay, let's see what happens. So I'd like to maybe go 90 by 85. So we had a 17, 90 to the downside. Let me go a little bit lower. I'm going to go 85. I'll go 80 by 75 for $1. I'm going to surround this thing with some pending orders today. We've had a good week overall. We've got a reverse iron counter running for today. So I'm going to put this in for $1, the 66, 80, and 75. I'm just kind of putting in grid trades today. So 80 and 75, 70 and 65 for $1. And I'll keep an eye on a couple of these levels. Now, if we see the market turn aggressively, maybe I pull the floor out. So I'm looking at bull put spreads as a floor. But if the market has like a nasty turn, I might just remove it. And we would look at that potential drop to 66. VIX box is around 66.50. So I would want to move way lower on the put side if things look really, really dicey. But if we can stretch to highs again, which I think we are close, right up to, we just poked the highs again, but are we going to sustain it? Maybe. So I'm going to move down a little bit. Hopefully we just get out of the dead zone today. We'll keep an eye on this for these two highs and lows. If price wants to breach these highs, then I'm going to try to sell it nice and high near my VIX box. So I'm going to the 65 call side, 60 and 65, 70, 75, 80, and 85. I'll put these in the chart or the chat for Telegram daily profit play. Is it possible to make 6,700 butterfly today? It should be, David. That's why I rolled it yesterday for a debit. It should be possible, but the reality was, if you saw what I posted in Telegram yesterday, I rolled I rolled the 6,700 by 6,720. That's the bear call spread portion of that trade. I rolled that out to October 31st for $1. So I essentially washed the trade. So the win on that trade is I need price to stay above 6,700 today. And if it does that, then I can keep that profit trap in the butterfly. So this is what the trade looks like. I had the broken wing butterfly where my pin price is 6,700 and here's 6,690. So what I did is I'm going to use this. I'll go to, let's go white. So I'm taking this portion of the trade, okay, which is the 6,700 by 6,720. I'm taking that trade out now to 6,700, 6,720 to October 31st. So the risk side of the trade is now been pushed out to 1031, and it's essentially worth zero. Okay, so initially I had the trade in for $1 credit, but this portion of the trade, if we're greater than 6,700 today, then this trade is a 10-3 expiration, and I get the 90 by 6,700, which is a $10 profit trap. So what I'm trying to do is survive this trade and basically give back $1, but get the profit trap today for $10. So if I can make $1,000 here, and I can, survive this trade where price by the end of the month comes down less than 6,700, that would be a wash on the credit spread and a win on the bull call spread. So if you can roll it, I mean, I think the dollar is still probably doable today. That's what I did yesterday. And so now that it's a little bit higher, it might be asking for like $1, $5, $10. That's okay. I mean, it's really about surviving the trade. That's why I rolled it. Okay, reverse arm condors are on 620, still good for another fill. I mean, not another fill. I'm not going to double down on that thing. I just want to see a price will get above 30. If it's above 67.30 today, which is what I need it to be, right? I need price to be above 35 or below 10 today. So either above 35 or below 10 for that trade that we put on yesterday. The other trades that I have in are pending bear call spreads and pending bull put spreads, which I will put these in Telegram. So today's DPP, we have the reverse DP running from Thursday. I need SPX to be greater than 6,735 or less than 6,710. Yep, less than 10 or greater than 35 for the 90-cent profit potential. Pending orders, a grid trade. I'm doing a SPX 10-3 expiration on the bear call side. Sell the 67.60 call. Buy the 67.65 call. And then sell the, that would be the 80 by 85, 67.80, 67.85. And then so 60, 75, I can go 70 and 75. And 80, 67.80 by 67.85. Okay. And then on the put side, these are all pending for now. This is all going in Telegram. 10-3 expiration. On the put side, I'm looking at, let's see, that would be 66.80 put. And the 70 and 65. Okay, trades are in. So that's 1, 2, 3, 4, 5 pending orders. Right now, price is making its way up towards that 50% ATR. That big gamma level that we talked about is 67.50. So what I'm trying to do on the bear call side is stay out of the way, where if we're going to get hit, price has to be up here towards the 100% ATR. Opening here plus minus 20 on the day, that's a pretty tough move to go from 15 to 60. That's a 45-point move, and the plus minus is 20. So we should not hopefully see price going higher than that. Make sense? All right. So some pending orders. We are above the dead zone now. Let's take a look at that trade really quickly. Let's see what the dead zone trade looks like. This trade is going to be probably taken till the end of the day, or not end of the day, but probably like noon, 1 o'clock. So we're poking some fresh all-time highs today. Does it stay there? Is there anything to disrupt it? Yes, no, maybe so. But ideally, I'd like to see price above 67 today. and give me that broken wing butterfly winner, and obviously stay out of the dead zone. So the best trade for today is like we just end up drifting higher. We go to 40, 45, 50. Let's see if we can protect some profit on the reverse iron condor. So here, this broken wing side, you can see it's up $785. That's good. This hopefully closes out for $1,000 by the end of the week. It's technically, I guess it wouldn't be a full $1,000. It's going to be 1305 minus 1135. So I paid $170, which the most I can make out of me is $830. Which again, I'll take $830. But I'll let this one close out. If it's above 6,700 today, that closed out for a nice win. Okay, and then the reverse iron counter is from yesterday. Right now, this thing is showing flat. So if I look to close this thing, it's trading for 595, 605. I got filled for 590 yesterday. I'm going to go ahead and set a take profit in at 5. Let's go 520. I'm going to put in a 520 debit, which would give me 70 cents out of the max 90. And price is reacting right at the 50% ATR right now. Okay. Let me do a quick update on the tracker. So here are my levels. I'll put this in the ATR tracker tab. So today, 10.3, 50%. So we have 67.37. And 67.58. And all the way up here towards the VIX box high is 67.80. Uh, 50% ATR here is 66.93. $66.71. And the 150 is 66.50. Okay. So we open up this morning with a slight gap higher, tap the 50% ATR. Gosh, it does. I mean, this is why I'm tracking the data in real time, because if we are just looking at a trade here, if you see these ATR levels as resistance, which they tend to be, I mean, even selling, I mean, getting a at the money 67.37. So if you do a 67.35 by 67.40 bear call spread, if price bounces off of this to the downside, you can turn that credit spread into profit almost immediately, you know. But it's just a gutsy play. I mean, if you're going to take these trades and you're gonna dance inside the 50% levels, you don't want to accept like 50 cents credit. You want like $1.50, $2.50 credit. So you make it at least worth the effort to get in, you know, define the risk where it's a little bit smaller risk. And if you can grab a quick like $50 out of that, $100 out of it, it'd be something worth, you know, managing quickly. So anyway, let's see here. SPX credit spreads, I guess. Rick says, so 68.15, 68.75. What? Rick, I'm not sure what that is, man. You have a question on a trade? I'm just not sure what you're putting in the chat. Is a long call spread the same thing? No, Gene, it's not. A long call spread, you're looking at a buy call. A long call spread, you're looking at this. You would be buying a call at the lower strike, selling a call. You want price to be above that sell call. I'm doing a sell call. So I would sell a call here, buy a call here. That way I pull it in for a credit. If you do a buy call, sell call, you're paying a debit. So time works quicker in your favor when you're doing credit spreads, which is why that's my preference. For this service, for daily profit play, I prefer a lot more credit trades because time in a 0 DTE is so accelerant. It works so quickly for us that, yeah, I'd much rather trade a credit spread. So right now we've got some pending orders. I'm putting in pending orders here, pending orders here, pending orders here, pending orders here. And this is get me filled at a price I think is acceptable. If we are pushing into our this is our dead zone from yesterday. If we're above this dead zone, we hit 67.50 today. I think we should look to maybe protect some profit, be on the safe side. Even if it's not full profit, which obviously full profit's the end of the day, if we're up here and I've got 30, 40, 50 bucks of profit, I think I'm going to take it and just protect it. True, but your risk reward is going to be, I mean, it's truth, Ken, but your risk reward is going to be different. In a 0-day environment, you're probably paying. Look, I'm not setting out of the money credit spreads at terrible credits. I want price to fill me at an acceptable credit. So typically, you're going to pay more for the in the money debit. You're going to pay like 70, 80 cents on the dollar for that in the money debit spread. So what I'm doing is I'm going to lower that risk, right? If I had to get into a $5 wide bull call spread and it's going to cost me $4.30, I'd rather just take a credit spread and get $1 and get it filled at the level that I think is safe. What you're seeing is, so everyone that I'm seeing posted, Ken, you're posting to host and panelist. Rick, you're going host and panelist. So everyone type in to everyone, change your setting in the Zoom chat, go to everyone. So you can send it to everybody. So instead of just sending it to me, send it to everybody so we see the chat. Okay. All right, very good. So as far as the levels go today, do we have the capacity to get up to a 50% ATR? We're already there. Do we have the capacity to go up a little bit higher towards that 67.50? Well, if we do, we hit 67.50. That checks this gamma off the list for today. We've got a high up here around 55, and I'm trying to look at a sell trade around 60. So hopefully we're not going too much higher than this call wall. And also from the 16 to open at 23, it's like a plus minus 20 on the day. We shouldn't go 40 points higher today. We shouldn't. Hopefully we don't. So that's, again, what I'm kind of banking on as far as my grid trade is if we want to get up towards that 67.50, we should get filled on those credit spreads or a credit spread. And hopefully that dollar is safe where if we hit resistance and come back down, we get $1 profit out of that thing. Okay. So right now, the reverse trade from yesterday is still trading around $6, 6.10, 6.15. So I'm down about 20 cents in that thing. But the other trades are all pending. These are all bear call spreads. These are bull put spreads. Those are just pending for now. This is the expected move for the remainder of the day, plus or minus 19. So if we're looking to sell here, this is my starting point. This is kind of my ceiling, 67.60. If I start selling, they've got to be getting a little bit closer. It's trading for 60 cents. I'm asking for $1. So price would have to go a little bit higher to get filled for $1. And I'm okay with that. I was never in the trade you rolled. Then don't take the trade, Rich. I mean, if you're not in the trade, there's no reason to survive it. It's like, don't take the trade. I'm rolling it because I'm trying to extend the life cycle to not lose on it. So it doesn't make any sense to take a trade and roll it. It's like, it's a bad trade. I'm rolling to survive the line in the sand, but if we stay above 67, I get lucky on the bull call side of it today. So I won't worry about it. Okay. Defaults to host. That's fine. I mean, if it does default there, that's fine. Just change it to everyone. I changed it first thing in the morning and then when I'm posting comments. So test, right? So I send that to everybody. Now you can see the chat. All right. So here's where we are at. So 50% ATR is hit. If we continue to climb through that, going from 50 to 100 is potentially gettable. We have that call resistance in the way around 67.50. I'm trying to sell at 60. So this should be safe for us for the day to close below 60. But if we can get to 50, that gives us 20 points of wiggle room on that reverse daily profit play from yesterday. If we can grab 20, 30, 40 cents out of that, fantastic. But that trade's probably best around like noon or 1 o'clock today. Okay. Or if we have this thing dump, I need it to be below 10. We have the positive negative gamma pivot at 66.95. So my thoughts on the day are either one, we make our way up to the call wall around 67.50 and we stay above 6,700 for the day, which I think we should. We shouldn't hit 50 and then drop 50 points. I'm hoping that's not the case. Or we hit this 50% and we fall down to this 50%, that would threaten my bull call spread, but it gets us out of the dead zone. As long as we are less than 67.10 or greater than, that's supposed to be greater than 67.35, then I'm out of the dead zone and I've got profit. Okay. So truthfully, the easier thing is now that we are above the 35, I need this greater than 35, right? 67.35. We're already above it. We might as well cheer this thing on to the upside. And let's hit 50 today. Let's hit 50, 55. Let's get some sells up here for a good level, and let's have it not close above it. That's how we win the day. Okay, let's not hit 50. Do you have a sell call at 50, Larry? Well, I mean, testing 50 versus closing above 50 is very different. I mean, testing 67.50 is okay. I certainly don't want it to go closing above that. But I kind of need it to hit, 40, 45 in order for me to get filled on that, bear call spread. So I got you. So you got 55 by 85 iron condor 10 wide. Okay. So you got the 66, 67, 55. Okay. You went a little tighter. So you got a 55 call level 10 wide. Gotcha. Yep. I get it, man. So we're making some fresh highs on the year. No complaints. Off we go. So we're at the 50%. The nice thing, if we're not getting a sharp rejection at the 50, this might have the wiggle room to get up into this, we go from 50 to 100, but I think between the call level at 67.50, that might give us the fill that we want as far as the bear call spread. But obviously, I don't want price to go higher. Based on a Friday, based on the expected move, based on the gap, we shouldn't be closing above. We shouldn't be. Now, the VIX at 16, it does potentially mean the markets could have, the move all the way up to 67.80. That would be like, well, I guess for a VIX at 16, the market rips up. We find the extremes. I'm trying to sell, and I will do this. If I am in the 60 by 65, I will probably add a second or third contract into those higher bear call spreads because I'm going to do my best to kind of defend the extremes of the day. And hopefully we're not going to sit here and, push up on a Friday and close at the highs on a Friday. We're already at highs. So my statistics of Thursdays and Fridays being days the market likes to make highs, it's true. Happened yesterday, it's happening today. So the market is making highs on Thursdays and Fridays. But what I don't want to see is don't push up to these extremes. Don't push up to 100+%. Don't push up to 150. But, we can't control this stuff. We just have to trade a process. I think that we have natural resistance levels here, here, and here. It is seldom, if ever, where you see price above the VIX box or greater than a 200% ATR in the day. In fact, that's one thing that Zero DT has been very good about is maintaining that type of market efficiency. And if we do get there, I will probably just automatically take a short position for Monday. Right? Like, I mean, if I'm looking at carrying risk today, if I'm taking on risk where this market's up to, 67, 70, 75, 80, I am most likely going to take a short for Monday out of the money and let this thing hopefully drop and recalibrate. Because it's going to be very rare that the market can sustain that type of trajectory 2 days in a row. It's so hard to do it 2 days in a row. In fact, I looked at Tacey had an interesting study going after, the average like win streak, losing streak. The average win streak on a 10 wide. This was Iron Fly, so it wasn't Iron Condors, but Iron Fly was, I think it was like 4 days winners, 1 day loss, 4 days winners, 1 day loss. But that was a 10 wide Iron Fly. It's a different strategy. But they were talking about like a quick 10% profit. So there's a member that pops in here, Vladimir, that does a lot of iron butterflies. 10% seems to be a pretty good price target. Okay, so that kind of makes our job good for the day. Levels that I need price either above 35 or below 10. And for my broken wing butterfly that I still have the bull call spread on, I need price to stay above 67. So to me, it's get above here and stay above here. Get below here, stay below here. I'd rather see price staying here. I'd rather see price staying up here a little bit, staying somewhat elevated, closing at maybe all-time highs for the day would be nice. But I'm not going to get too flirty with this dead zone trade because if we're at, 40, 45, or 50, if there's some profit, I think it's best to take this because this is a trade that we typically have to manage late in the day. So if this is offering 30, 40, 50 cents of profit, I'm just going to take it, stop worrying about it. Then I've got that $870 profit trap on the broken wing side. And if we get filled on a couple spreads, 60 by 65, fine to start there. It should be still looking good there, Bill. Yeah. That 68.25, that was the 10-10 expiration. This is 40.60 for the 10th. This one, I mean, it should be trading for like $1.30, $1.35 right now if you want to take it, or go out to the 10th. Okay, let's go out to the 10th and go out of the way. So go to the 10th and look at let me flip this around. So I've got, these are all trading at like 16 deltas, 12 deltas. Mechanics still look pretty good. If you did a 30, 35, 50, I mean, you can do this trade here, Bill, if interested, a 30 by 35 by 50 broken wing butterfly for $1. I mean, it looks like it's still offering $1 credit. I do have a video. If anybody wants to check this out, I posted this yesterday inside my Telegram. I did this in the public Telegram. So I had my YouTube session yesterday, getting fancy with broken wing butterfly, and then I also posted this video. So have you ever heard of broken wing butterfly? It's reliable trade in our daily profit play sessions. There's a video lesson here if you want to check it out. So if you have my public Telegram, I posted this video yesterday. If you have chat history, let me know if you have this one. So what I did is I walked through that 68.25 or that 68.35 broken wing butterfly, pulled it in for $1. I'm risking $9. We're trading at like a, 85% probability profit right now based on the deltas. So I just think it's a good way to kind of break it down where I'm calling the top or I'm calling the bottom with that broken wing. Make sense? So I would say check that video out. And then we apply this a lot in the daily profit play when it comes to if I'm going to go out a week or so. I'm looking at, when prices are at like a big move up, I like to put in that broken wing butterfly trade because it's very rare for price to keep sustaining those moves higher when we had like a big push up. Okay. Small caps pushing up today. I mean, it's fine. Like I'm going to cheer on the markets. I really would. I'd rather see the markets stay high today if possible. Not too high. Obviously, I don't want to see like prices flirting with like, I don't want prices to threaten our levels. Not at all. But if somehow the market stays within, 50%, maybe the gap fill, positive gamma. I mean, I don't know. We'll see. What I'm trying to do is get out of this dead zone. So we'll see what price does. S&P is up on the day. NASDAQ is flat on the day. Dow is up on the day. Russell is up a decent amount. Look at this Russell. This baby's ripping. So Russell making a convincing move higher. IWM is now at 246. Previous all-time highs at 245. So can we make a close above the highs on small caps? Can we keep the green markets across the board? Can we go green on Russell and Dow and NASDAQ and S&P today? Maybe. Okay. Bull put spread 90 by 85, credit for $1.20. Good trade. You got that right at the open, Dr. John? That's a good trade, man. $1.20, debit 25 just closed out. That's great. That's a great trade. Oh, yesterday. Okay. Well, that's different. I thought it was trade this morning. Gotcha. Okay. Okay, just watching short-term price action. I mean, there's not really much maintenance to do for the day. I'm looking to see if price is going to drift higher towards this 50%, maybe a little bit higher into the 45s or 50s, then we should get filled on our first bear call spread. We rarely see price above the 100%, above or below. If price today is, happy to make all-time highs, we've got a gap right here. We still have positive gamma. Maybe the market gets a float. Now, what that does make me not thrilled about is the dead zone trade that I have for the end of the day. I need this again greater than 67.35 or less than 67.10. To me, it's easier to stay above 35, right? In worst case too is like I don't mind taking a small loss in this trade. This is a small loss. I think more importantly is we stay above 6,700 because that trade is worth $870 today. That's really where I'm going to make the money. If I lose, 30, 40, $50 on today's reverse iron condor, big deal. Okay, but we'll see what price does. We have some wiggle room. We could get a gap fill. Maybe it's going to bounce around in here. There's still the positive negative gamma, 50% ATR, but closing above 67 would be pretty clutch. Okay, ticking down to just a bear call. I mean, if you want to call the top, bear call, like where are you going to put it? Right there, right? If you think that's the top, there's your bear call spread. I just don't think the day is done. I mean, putting the trade at the 50%, there's obviously risk in the day, right? So, if you want to take a stab at it, what's a 40 by 45? If we go for today's expiration, 40 by 45. So, I could get $1.60. If price goes down, that $1.60 pays, right? $1.60 credit becomes $1.30, $1.20, $1.10, $1. You can grab partial profit out of that. But if price comes back up and gets to 40, 45, you're taking on 340 a risk. So, if you're going to do a spread, it's like you got to believe you got direction right. I just think that's a little too tight to call the top. That's just me. But, if you think this is the top for the day, you can do a credit spread and price goes lower, you'll get paid on that credit spread. PMI printed 50. Is that above or below the expected move or the forecast? I didn't know we were having any news today since non-farm was canceled. ISM, so 10 o'clock came in. Okay, so that's services PMI at 50. That's not good. So services has been the one PMI that's, greater than 50 is typically a good thing, but we've been well above 50 on services for a while now. It's printing at 50, which is a miss. So, I don't know. The market might take that as, hey, we have news. This isn't good news. So the news pieces that we had this week is ADP, which were terrible. We didn't have non-farm payroll. Now we have services PMI. That's a miss. So anything above 50 is a good thing. Anything less than 50 is seen as contractionary or, in recession territory. But we've had manufacturing PMI below 50 for a long time, but it's been climbing up. And here we go with services PMI dropping to 50. Yep, so below forecast. I got you. So yeah, we'll see. Again, out of the dead zone, still holding above 67 would be good. Stands to reason. Yeah, but you can't say that. There's no non-farm data. So we're going to officially have it next week, which means you can't speculate and be like, well, it's all next week. Now that it's on the calendar, this means that there's probably going to be 11th hour get together. Let's get the government back up and running. And then they can release the data next week. And we don't have to speculate on what non-farm payroll would have been, but they'll actually show it and print it next week. And they'll probably try to fudge the numbers. Okay. But the non-farm for next week is not looking great. I think the forecast is still 52,000. Yeah. So unemployment rate not going up. So that's probably seen as a good thing for right now. But non-farm numbers are pretty crappy. We're likely going to see a lot of non-farms that are less than 100K, which is not awesome. Okay. So I have a hard stop today at the top of the hour. So I'm going to get to my pinch point. We had a great, here's the deal. I'm going to start talking about pinch point here for about 30 to 40 minutes. We had a 2-day trading session this week where we did a Wednesday, Thursday live trade session. If you have access to my pinch point scanner, right now there's still about 30 stocks up for grabs. We priced out a bunch. I think we have 7 OKE, OKTA. We have 7 live trades that are still valid. You can still take them today if you're interested. Unless the stock has, if you look at my trade tracker from Pinch Point, okay, so I'll bring it over here. If you're a member of Pinch Point, you look at my tracker, I do have some pending orders, and then these are filled. So this is live, this is live, this is pending, live. These are all new. UPS has already jumped. We're already up like $80 to $100 on this trade. So that's not one to chase, but this is still valid from Wednesday. This is still valid. Obviously, don't pay a lot more. I mean, I would say you want to get into this within about plus or minus 5 cents or so, 5 or 10 cents. So don't pay more than 271. If you get in for 250, that's even better. Okay. But look at the stock price. If the stock price is still in a consolidation window, it's a good trade. And this is what we priced out with my Go filter. Okay. But we do have some nice profits running. Yeah, Robinhood is looking pretty good. We're probably creeping up on our profit target, or at least one of them. So Robinhood is currently about 27%. We're about to hit our 30%er. So this is actually pretty perfect. I say we just take it. You know, it's one less trade to worry about. I'm taking 28.5% versus 30%. Let me see if I can get out of here for 675. 675 is just off of my profit target. Let's take a 73 maybe. Over the weekend, it probably fills our profit target over the weekend if you want to hold it. But I'm going to go 72. This will be just under our 30% take profit. Come on, you turd. All right, Robinhood's closed out for 670. So, yeah, we'll take the profit on that one. It was close to our take profit. So 524, close out at 670. So officially making that one a closed trade. $27.9%. There's your winner. All right, so I'll put this in the tracker for Pinch Point, trade management, Hood, closing for profit. We are sitting at 28% profit, and the pending close is at 30%. I'm closing manually at 6.70 credit and taking the win. Okay. So a 524 to 670, that's a one contract trade. That's $146. Pretty simple. Okay. Kirk, really quickly. Yes. So very quickly, what you have to do if you're going to roll that trade is you have to dissect it into the bear call spread. So the only thing I rolled is the bear call side of that trade. So what you'd have to do is this. Let me go back to the charts. Okay. Go to the charts. So if you have you're talking about the 10-3 trade, right? So I have the buy 66.90 call. I have the sell 6,700 call, and I have the buy 67.20 call. So initially that trade was taken in for $1 credit. What you have to do to roll this thing is you have to separate the call. So the 2 call, that's a 6,700. So to roll, you have to take the sell 6,700 call, take 1 contract of that, and then the buy 67.20 call, 1 contract of that, and you roll out to 10/31 expiration. And this is probably going to be for a debit. Okay. So if the broker says, well, if you want to do a roll, you either take the 6,700 call with 1 contract, 67.20 call with 1 contract, and roll that out. So what I want to make sure you don't do is don't take the 2 contracts and roll that. You want to take 1 contract. So the bear call spread, roll that out individually. right? So remember, a roll trade is actually closing out for a loser and rolling for another trade. So technically, if you're rolling the 6,700 by 6,720, it's rolling a losing trade, but you're giving the trade more time for a net dollar debit. So this trade was a let's see, I rolled for a $1 debit. And what that means is I wash the overall broken wing butterfly trade. But today, if SPX is greater than 6,700, I keep the $10 credit on the 6690 by 6700 bull call spread. So I can get lucky today by price being above 6,700. I can keep the profit on the bull call side, but you have to go one contract for the 6,700 call, one contract for the 6,720. That makes it a bear call spread. You're going to roll that out. But because of where we are expiration wise, which is today, and going that price is out to 6,730, you're probably going to roll that for a debit. So the net on the trade really is, if this trade survives, I want this trade to survive. And this trade is going to cost me, basically $100 because I'm sacrificing the credit. So I'm going to lose $100 on this thing and just wash it. But my win is going to come from being on the bull call side if we're greater than 67 today. That makes sense? So I'm segmenting the trade, so I'm just rolling the bear call spread. Okay, like I said, I've got a hard stop at the top of the hour, so I got to start jumping into this pinch point. But we just closed out a winner on Robinhood. We've got 7 live trades running from this week. We had a trading session on Wednesday and Thursday. All we did is we went into the scanner, went in stock by stock into the Go filter, priced them out, make sure we had good options, good prices. I'm willing to basically go after like a 90 to 100% return on risk. And oftentimes for the high probability of profit, I set the take profits at a 30, 40, 50%. I like the 40 and 50% trades ideally because that's a nice chunk of profit. The 30% take profit is when we're paying a little bit more. If I have a debit that's over $5, I'm usually setting the take profit at a 30%, just so it's quicker, easier. And, I want to get those, especially if I'm paying more for the trade. If I'm paying more, I want a faster profit. I don't want to take on the risk. I want the probability of profit with the pinch point. Okay. All right. So let me get to it. Let's run through this. All right. Pinch point scanner. This is a tool. And so technically, if you just get the pinch point scanner, it is a tool, but it is one of my favorite tools that I've ever built. This essentially is, I've said this before, I'm not a stock picker. Okay. I want software. I want scanners. I want dashboards to give me great trades. The pinch point scanner is spoon feeding me great technical trades all the time. And so there's over 9,500 stocks that we have in the scanner. And this week we priced out about 35 or 40 of them. That's a basically like a bowl of needles. If you got the needle in the haystack, that's a bowl of needles being given to you that you now price out and make sure, is this a good trade? That's a lot better than chasing AI and chasing, Tesla and I hate chasing. I certainly hate paying expensive premiums for these trades. So when things are already moving, I don't like to chase. So I'm selling puts. I'm doing other trades, but pinch point scanner is spoon feed me the needle, right? Okay. And of course, it's not perfect. I'll show you the tracker right here. So pinch point scanner, we have 85% winners. Okay. And we're going after routinely 30, 40, 50% return on risk. That is a set it and forget it trade. It's usually a swing trade. They're about 60, 80, 90 days out. But I have closed out probably 90+% of these trades. So of these winners right here, since the service started a couple months ago, all these winners, I would say most of them are closed out automatically by the broker. So I set the trade up, set the take profit, broker clicks it. In fact, on that Robinhood trade, if I didn't do anything and it sat over the weekend, it probably would hit a profit over the weekend. But we've got, 28%. I'm going after a 30% take profit. I'll take it because it's right in front of my face. But works out very nicely. For me, it's a very low maintenance strategy and service, which I love because that way it's something I can take a lot of quality trades and let the broker do the heavy lifting. Right. So I think this is a nice way to view stock trading and a predictive breakthrough that could hopefully change the way you trade the market, especially technically when don't chase, don't pay high premiums. A predictive breakthrough that's first of its kind, thanks to a top tier team of mathematicians and traders like myself and a couple others with decades of trading experience. There's also a game-changing way to decode a stock's volatility profile. This is really where the bread and butter is. What we're doing is we're cracking the code for spotting when we have a coiled up stock that has potential to explode higher or lower. Okay. And this is usually before it happens. So I'm talking about a brand new way to front run some of the most explosive moves in the entire stock market. Now, I know this sounds crazy, but it's all thanks to the pinch point scanner. The best part is you can have this tool up and running today with instant access, nothing to download, right? You don't have to download anything. Everything you need is hosted on this easy to navigate website. It's inside your classroom. Okay, just go to the classroom, one-click trading, pinch point scanner. Once you click on the scanner, you've got all stocks. I like to go immediately to the go filter. So if you click on go to generate your list of pinch point stocks every single morning, from there you see a list of top stocks that are primed and pinched and coiled every single day. Okay, here's an example on NextAir Energy. Pinch point scanner flagged it as a go. It's coiled up. You can see the stock is as coiled as it gets. Pops up in the go filter. The algorithm inside pinch point scanner automatically generates a stop loss and take profit target based on expected range, movements and current volatility. And what we usually see